No matter which markets we're trading, we often see two different types of people. It could be in crypto, Bitcoin, stock markets, or even real estate. We often see these two different types of people come in. So what are they? Well, really simply, one are the folks that get here early, and the other are those that get here later. So which one are you? Let's have a look at that in today's video. But more importantly, if you are coming in late, so no matter where you come in throughout the cycle of crypto, Bitcoin, stock markets, real estate, how do you identify which stage of the cycle you're in? This is the most critical thing. We're led to believe it's the most critical thing to find out what the top price is. Is it 300K Bitcoin and that's exactly where I'm going to get out? Of course not. We have to be fools to think that way. This is what happens every single cycle. People look for this exact price point. They get wrecked every single time. Don't be that person. What we need to understand is where are we coming into this cycle if in fact we have not got in throughout the lows of the cycle. So let's have a look at that in today's video so that we can make sure that we are not here at the end and loading up right at the end. All right, guys. Like and subscribe, you know the deal here with YouTube. They make us do all sorts of things. So with some mutual understanding out of the way, we have one final thing to look at. And of course, it is Thanksgiving weekend. It's Black Friday and Cyber Monday. So the link in the top of the video description is for the TIA premium sale. I'll talk more about that later in the video and explain to you what is involved in TIA premium. But for now, let's dive straight in. The time you guys put into the comment section, don't go wasted. I've used these to help shape parts of the videos. So if you do have questions, leave them down below, just like Mark has done, which is shaping part of this video that we're looking at today. Looking at, are we early or are we late? The most important thing is timing in the market. People say you can't time the markets, but I'm sure you've probably seen that by now, especially with everything going on in the markets, what I've been posting on Twitter over the last several years and on YouTube, which we've seen from the bottom back in December of 2022, looking at those lows coming in based on timing. I think you can see by now that this is possible, but the majority of people don't think it is because it's just easier to believe that it's not possible and not put the work in. I hope you guys are putting the work in. So from yesterday, we saw with some of this timing that Binance was already on a slippery slope against its BTC value. That continued to come down. And right now, overnight, well, BNB USD also had a little bounce. BNB BTC, slight bounce, but it's still in a downtrend. So in terms of timing, no matter what happens with the news, if it's in a down cycle, it is going to continue down. If the news is fantastic, it's still going to continue down. If the news is terrible and it's in a downtrend, it's still going to continue down. But if we are in an uptrend and the news is bad, the market is going to continue going up. And that's precisely what we saw with Bitcoin overnight. We saw Bitcoin rise about 5% heading into this close now at $37,500 after yesterday being down 4.5% as well. So no matter what the news is, it matters more so where we are in the cycle. And at the moment, the crypto Bitcoin cycle is well and truly up in a bull market. So I just want to come back to that and look at the timing of the wall of worry. When you're in a bull market, a lot of this news is essentially just bad news. It forms dips and essentially continues to climb out of those lows. It's basically like this comment says, it becomes a brick in that wall of worry. The wall continues to climb and the worries continue to come through. Prices continue to go up. As we look at here from a macro perspective, I'm not looking at it from a 4-hour chart or a 24-hour chart. This is more so from the weeklies and the monthlies, and you can continue to see this. We take that step back, it just becomes so much easier for us as investors to see how this continues to come through in the market time and time again. What else do we need? Well, we need to see what's going on in the macro environment. So traditional finance, taking the biggest markets in the world, the US stock markets, and as we have just seen again from the S&P 500, it's closing in on another all-time high price. Is it too late? Well, according to Gann, it's not. The best and easiest times to make trades and to invest in the markets is when they head into new all-time high prices. That goes against many people's beliefs because they keep trying to short the tops. Now, you might get a correction from those tops because, of course, the price is coming up and you might get a double top and you might see some short-term movement back to the downside. But longer term, if we're not here on the short-term trading perspective, then you're most likely going to see those markets continue up and break that all-time high. And if they do break that all-time high, things get wild. Markets go up insane amounts. Look at pre-COVID. You had the all-time high here, major collapse. Markets started to climb back. And you can see there was a little bit of a stopping point for the market before it headed up, came back under, tested those levels, and then it went on and continued to another fresh all-time high. This isn't just a one-off. You can see it happens time and time again. There's your double top, pullback, market tests the higher prices, another pullback, higher lows, another pullback, goes on again. So we could spend a whole lesson on this, going through how these markets break out into new all-time highs and then the prices just go absolutely ballistic. And the reason for that is there is no overhead resistance. And if we are early in that cycle, we're going to see a lot longer for prices to continue up. So the important point to note here is there any overhead resistance? If in the case of going into new all-time highs, typically not. And if we are able to break through those prices, we don't want to be trying to short a market when there is no overhead resistance. But that's typically what a lot of people tend to do because they think the top has to come soon, has to happen, and they start to get short, which basically wrecks them. Always have a plan in that case. So macro environment, 5.3% away from a new all-time high. We're looking at this probably heading into a new all-time high for 2024. And as part of our Bitcoin roadmap, we typically see the S&P 500 head into a new all-time high, pull back, and then head into another new all-time high. And at that stage, typically Bitcoin is ready for a new all-time high itself, which is why we've got that timing out into 2024. The NASDAQ, same sort of thing here, 4.5% away from a new all-time high price. It is at its second highest close now for 2023, and it's been an absolutely monster move out of the October low. You can see in some of my comments here, I don't think these lows are going to get broken in this cycle based on reasons I've given in previous videos, so I'm not going to continue to repeat that here. But essentially, we had our transitional phase from the bottom, broke out, retest, well, basically a correction, and the market has bounced from that point. There has to be corrections. We have to anticipate some sort of correction soon because this move has just been ginormous. But at the end of the day, that's just normal market behavior. You get some corrections after significant moves. You can see this was a very significant move. Final move into the top, there was a very significant correction. But overall, the market continued in the trend to the upside. But how does that tell us if we are early? Well, we look at the timing of the cycles. October was a very significant low, with March being another significant low. Now, some of you might remember that we looked at this and saw from the data, October and March have been fantastic areas in the market for significant lows. We saw that in the collapse here from the .com bust. You've got a low here in October. You've got another higher low in March. The exact same thing happened 20 years later. The exact same thing. You've got the GFC crash. This was in November, but the big collapse was October. Then you had the March bottom here. So you had very, very similar timing happening at the global financial crisis, the GFC. Big correction, market moved away from that point. Now we had the COVID pandemic. Guess which month it lowered in? It lowered in March. These months are very significant for lows in the S&P 500, the NASDAQ, stock markets. It happens time and time again. So we had our low here in October. We had our very significant higher low here in March, and the markets have moved away from that point. So we start to confirm our bases for the next move to the upside, and we can start to make our counts from those points as well. So now that we've established some of the low points in the market, it gives us a grounding point, a point to then forecast for the next significant cycle turn. So we've been doing this for the stock markets, real estate markets, and also the Bitcoin market, as you've probably seen on the channel. Now, there's a lot to get through, a lot of education in here. So if you want to dive deeper into this for your own personal learning and your own portfolios, then there's TIA Premium, which of course is Black Friday weekend, the biggest sale of the year. This is just a quick look at what's in TIA Premium. There are multiple courses here to help you begin that trading plan and that investing plan. This one is your foundational course. It's our flagship product here, Timeless Trading Skills. There's also the Gann Swing Accelerator, which will help you understand how to use the Gann Swing indicator that we use here on the channel for our long-term investing and short-term trading. The Wyckoff Volume Accelerator is nice, short, sharp lessons so that you have more time to be spending on your own trading and investing plans, getting through that information and applying it to your own trading. Now, we've also got masterclasses on everything to do in the markets, stock markets, real estate, cryptos, so that you can put these plans together and start to learn how to accelerate the growth of your plans. Not only where do I buy and sell, but how do you accelerate the finances within those plans. That's a brief overview of TI Premium, but if you want a more detailed look, drop your email and address down below in the top of the video description. There is a link there for TI Crypto, the subscribe to our email list, and you will receive emails to have a look through the total course itself. Now, with everything in trading and investing, there are no 100% guarantees. So we also need an indicator to let us know if these markets are turning earlier than had anticipated. So I've also got that to get through, which is the swing indicator. And that's one big thing that we look at when it comes to identifying the peaks in the market. They're really good at the bottom to help us know when the markets are basically starting to break out of those lows, and that's precisely how we identified this low. There were multiple things that came together to give us a reading on how these markets were breaking out of their bear market, especially while the masses were looking for big significant pullbacks back down to 12K, 14K, 9K, whatever it was. You guys may remember at the time, but if you are only joining the markets a bit later, just know that that was the market sentiment back at the lows. It was the most fearful at the lows. That just is markets and how they always work. The bottoms are always on the worst news, which essentially makes it really difficult to be investing at that time, thinking that the market has to go lower because how could it go up? Everything is so bearish at the time. So in terms of the cycle day count, I'm looking at this being roughly 33% into the bull market, but we want to also keep count of the lows to the lows. And in that case, you're looking at roughly 4 years from low to low. So we're roughly 12 months in. I'm looking at a breakdown of 18 months for the bull market. So the bull market is 2 lots of 18 months. A first period, which is pretty subdued, and then the second period, which is pretty fast. You can see from the last cycle and the cycle before that, you've got significant moves in the first half of the bull market, and then the second half is when you really get that move happening rather quickly. In the case of 2021, you had a really big move first up, and then Bitcoin struggled to continue on with that momentum for, I guess, the last 6 months of that 18-month period. But nonetheless, in each of those periods, you had a really strong move. It caught a lot of people off guard, and they're expecting the prices to go up even further. But like we can see from the previous cycle, essentially all of the move was done by February 2021. And I mean, the price really didn't go that much further from that peak, which was 58K. Sure, it went to 69K, but it wasn't there for very long. And that month then closed below the previous top. 12 months in, I think there's roughly a 36-month, a 35-month move to the upside. And from that point, that's where we have to really start to think, are we getting in a little bit late? So are we still early? Well, in the case of this, I would think that we're relatively early. We're not as early as we were 12 months ago, or even 17, 18 months ago, when we're looking at June for another significant period, that June 2022, when CeFi and DeFi collapsed. You had the lunar collapse in May. And these are all the news articles that came out at that time, or the news headlines at that time. And then the market went through a bit of a sideways period. So we're not as early as that stage, but we're nowhere near as late as what happens at the end of the cycle in that second 18-month block of the roughly 3-year move to the upside. So day counts are a big one. We're looking at market sentiment is also another big one, and we really haven't peaked out at any of these significant extreme greed readings just yet. Does the bull market always have to have extreme greed? I guess not really, but I think we've mostly seen that across history, where the bull markets will get into extreme greed at least near some of those tops. So we're looking at the extreme greed through early 2021 here. You can see February, And essentially, the price for Bitcoin, at least, really didn't go that much further. Then you had the lower top in the market sentiment here in October, where the final price top happened. So the market sentiment top happened earlier, but the price top happened a little later. You can see that it got into extreme greed when Bitcoin was climbing through 2019, which was this extreme move to the upside. But within that move, the volatility got extremely wild and was able to correct itself before the next major move happened. So you can see that we had extreme volatility in the extreme greed, and then often from extreme greed moves, you'll get extreme fear coming into the market. In this case, we've had a pretty stable move to the upside. There hasn't been anything too extreme when you compare it to the previous cycle. So it's not that bears and bulls are completely balanced. We're still seeing a few more bulls in this case because the market sentiment is shifting over into the greed, but we haven't gone into that wild volatile moves like we saw in the previous cycles, early on in the previous cycle, and then later in that cycle as well. So that leads me to think that we still have a fair bit more time left in the cycle because we haven't got to that stage where the markets just get over the top and that extreme greed rushes into the market. So this is an important one to keep track of as well, to identify what the market sentiment is doing at the time. So we've looked at two major things here, two major reasons why it seems like the markets are still early, if you will, but not as early as they were 12 months ago. That's the case for Bitcoin, but what about cryptocurrencies? Can we go and gamble on something else that hasn't moved yet? Even though the beginning of the cycle was roughly around that 12 months ago, is there something else? Well, using our TIA crypto total market cap, which allows us to remove the market caps of major coins, so Bitcoin, ETH, and all of the stable coins to give us a better reading of the altcoins themselves. You can see that there was still a low back here, roughly December, January time, but the market has really only just started to break out of that accumulation. Whereas for Bitcoin, when you're looking at the bars back here in the colored bars, Bitcoin really has gone on a significant move to the upside. So for the altcoins, this white line here, it's only just starting to break out of the accumulation. So that, in terms of identifying where we are in the cycle, is still telling us that we're relatively early for those cryptocurrencies, even though the cycle lowered back in December, January of this year. So that is our third way that we're looking at identifying where we are in this cycle, looking at the swings. So we can basically draw on our swing indicator for the total cryptocurrency market cap, or for Bitcoin, just using the TIA Gann swing indicator here. So eventually we start to get that breakout, and the move typically lasts for several short months there, big pullbacks, and then another big move as well. So once these altcoins break out of that accumulation, market runs happen relatively quickly, and that's when you could really consider that it's not necessarily that early anymore. There are still very significant gains to be made, but in terms of timing, it's very unlikely that those investors getting in at that stage when the market starts to go parabolic are early. But for them, it'll probably feel like it's early because they're not used to how long it's taken for this market to build up. You can see from the big extreme bars, you had about 10 months. You can see here 10, that's your big bar here, the bars that are much larger than anything that had happened previously within the accumulation. And they had about 10 months of extreme moves to the upside and the downside. 1, 2, 3, 4 extreme green months, 2 red months, and another 1, 2, 3, which is still red, 4, 5 months up. So I'm looking at the months up. After that point, market rolled over. That's a look at Bitcoin and cryptocurrencies in terms of the cycle themselves, looking at the time counts, the day counts there. We're also looking at the swing chart, and we're also looking at market sentiment. Now, if you wanted to learn more about the swing chart, there is a free 7-day trial on the TIA Gann swing indicator. Along with that, you'll get access to a lot of educational content to help you use that swing indicator. Plus, you get a bonus with those swing indicators. So if you're interested, check that out. Link will be in the top of the video description. We covered a lot of information in this video, and if you are interested in learning more about how to implement this into your trading plans and investing plans, check out that Black Friday sale. It is the biggest one of the year. Link is in the top of the video description as well. Otherwise, I'll see you back here on YouTube for the next installment. Whatever's happening in the market, we'll be covering it right here. Bitcoin, cryptos, stock markets, and of course the real estate cycle. Thanks again for your time and patience, guys. Until the next one, peace out.